in 2008. So that was slap bang just as we were kicking started into one of our worst recessions ever. And Ricky Noimark is a tax partner at Melanick Fine and has also worked for many years beforehand at McIntyre Hudson. So very good firms here, accountancy firms here in the UK. But I'm now going to hand over to Benjamin to kickstart this session. And as always, please, if you've got questions, please do write them in the chat and we'll try to get them answered for you, basically. So thank you. Over to you, Benjamin.
Thank you very much, Joanna. I'm very pleased, excited, and proud to be able to participate in Work Avenue events. It's a great initiative, you guys. I visited your center several times and was profoundly impressed, and I wish something like that existed when I started out. But I had help when I started out, not all on my shoulder. And it's true that beside my credentials as an entrepreneur, I weathered a couple of recessions, at least both the 2000 and financial crunch, the credit crunch of 2008, and then the Corona COVID of 2020, 2021. So hopefully I can contribute with some of my experience. We have a short agenda here. Basically, I'll try and limit myself to 20 minutes, maybe shave off.
Because we need to finish at 11:20, so people have a 10-minute break. So.
Okay, so I'll shave off a few minutes of that, talking more about the business advice. Ricky will speak about how to get more out of your tax, which is always important, but double as important when money is scarce during a recession. And hopefully we'll have some time to Q&A. And obviously you will be welcome and encourage you to put the questions as we go. Lovely. So with no further ado, so I was introduced already. Right now I'm maybe relevant to say that I was both involved in traditional industry like recruitment, in tech, in startups. Now I'm doing algotech, AI, all kinds of stuff. So hopefully I can bring a wider view. And I worked with Ricky for years, and I really think you should listen to him more than you listen to me, because that's where the money is. What is a recession? We're hearing this word recession all the time, and there is a dictionary definition of it: 2 quarters of reduced activity, financial activity. But what does it really mean to us as business owners? So we have experienced a very long, unprecedented period of economical upturn, and that perhaps means that the amount of money, the amount of business around is just continuously expanding. And if we are like it, I recently have a new dog, so a lot of my world comes with pets right now. So this you'll see that in the pictures. In an economical upturn, there is basically ever-growing space. So everybody can find their space. Business is always hard. Setting a business is always hard, but it's easier in an economical upturn because there's just plainly more money in the market and more clients are willing to spend more money, and there's space to everybody. What we've experienced in, I guess, 2021, 2020, beginning of 2022, end of 2021 is an economical slowdown. So that's it's getting tighter, right? It's, competition is more vicious, more difficult, I would say. Clients have less money to spend, but we can still find our place, right? We can still find a way into the market where everybody can fit in. Now we seem to be in a full-flung economical recession where, as the picture shows, it is possible, or actually the reality is that some players, some businesses will not have a space in the market by the end of it. That's usually what happens in a recession. So yeah, I know it's a bit scary and we like to be positive, but it's better, like Churchill said, look the truth in the eye and smile. This is the reality. He didn't say that quite, it's a paraphrase of his. And that's what we're now expecting. The good news is that it is possible to defend your position, right? You can try, and even if you're a small dog fighting a larger corporation, larger competitors, if you're a freelancer you can defend your niche. And you can defend your niche by realizing what can you do better than anybody else in the world. So, for example, in 2008, as you said, with Activus and Proactive, I was running a staffing agency at the time. By the way, Proactive I didn't found, but Activus I did. And recession hit, clients started tightening their budgets, and they were just not willing to pay the same money, and therefore they went to larger competitors who could do economy of scale and reduce price. And we went into this windwheel of trying to compete on price, and then we realized that's not going to win. We need to find something we can do that they can't do, or we can do best. And in that case was trying to change our product to be something with more personal touch, where large corporations struggle with, even if they have all the woo-ha, they say they do that, but the reality is that small businesses can find what the client needs, and in that case was finding in a recruitment a personal touch and changing our product line. In your businesses, it could be figuring out, if you're a web developer, figure out if they need maintenance, for example, if they need something else that only you can do, or if you are located in Finchley, the familiarity with Northwest London, with the neighborhood, can be an edge. So try and think, where do you fit in, which is unique to you, that nobody else can do, and then home on that. That can hopefully help you sail through the recession. The second point is realizing what is mission critical for the client. So what they cannot do without, what is really, really important to the client. And then perhaps, as I said about Activus, expanding or changing your product line, the services you give. And in my case, in that time, was realizing that our clients really needed somebody to handle the distribution of uniform and equipment for the staff. So although there was no money there for us, we volunteered to do that, and became therefore very valuable to our clients. So when they had to eliminate agencies and reduce spend, we managed to keep our share of the spend constantly and survive that actually, and survive it quite well. So I'll just repeat that: find a niche and figure out what's mission critical to your clients, even if it's not something you did until now, even if it's not something which is very profitable. Try and focus on that so you can retain your market share. However, even with those advices, times can be tough, and usually budgets do shrink, and we need to learn how to live with potentially less income. So how do we do that? Well, common wisdom is don't wait for that to happen, but start reviewing your budget now and see what you're spending on and figure out how you can spend less. Usually when we do that, we look at the distribution of income, and in this case, I'm showing household spend because really I'm thinking about freelancers where their personal life and their business life, I mean, it's not IBM, it's not the budget of IBM, and I work for IBM, and I can look at IBM spend separately to mine. When we are freelancers, it's all mixed together. And if we look at this pie, the things you can't really save on: food and drinks is only going to go up, prices are going up, housing is only going to go up, other goods and services, maybe you can cut a bit, transport is transport, and your eyes go immediately to recreation. Almost 14% is typical London spend on recreation, and that's where we can potentially cut. But hey, we're cutting the fun. We're cutting the things that we like to do. That's a bummer, right? If there's something we can do to not do that and still make it through, I think that's the way to take. And I think it is possible actually to save money without giving up on the good things in life. And that's by just being a little bit more clever on how we manage our finance. So in the last year, a year and a half, I've been looking into how we manage our finance and where are the points of managing our money better. And it seems like you can just cut it into 3 sections. One is the accountancy, which good accountants like Ricky and Melanie Fine, that are my accountant to be honest, can really help you reduce your tax burden. That's money straight to your pocket, and Ricky is going to speak plenty about it. I'm just going to touch about it from the business side. He's going to speak about it from the accountant side. Second is, sorry, how can we figure out where we are bleeding money or spending money we don't have to spend? How can we save? I'll give you an example. One of my clients right now realized that he can go from Slack Pro, which is very expensive, to the free version of Slack, and nothing happened to his business. He's continuing to trade as usual. Boom, just cut, I don't know, £1,000 a year, £2,000 a year, just like that. But for that, you need to know what you're spending on, right? If you're not very, very clear exactly where every penny goes, it's hard to identify those savings. And finally is how to borrow less. We lived in 10 years of cheap money where borrowing was hardly costing us anything. And now inflation is up as well as the interest rate, and we need to start cutting down on our overdrafts, loans, credit cards. So let's see how we do that, and we'll talk about it in a second. Let's start with the hardest task, and that's bookkeeping. Bookkeeping is the administration of your finance. It's tracking every penny that goes out of your bank account and every penny that comes into your account. And that's not as easy as it sounds, because we spend all kinds of money. We take the tube, we buy coffee. Beside the kind of main expenses that we do, money goes on printing paper, on this or that. And catching every single invoice is not that easy. However, without it, you struggle to make intelligent, smart decisions of where to save, and you end up cutting on the fun rather than on the fat. So that's bookkeeping, very important. Track every penny you spend, every invoice that comes in. Cash flow. So in a larger company, there will be a full financial team, there will be an accountant, there will be a financial director, there will be a financial controller, and there will be a bookkeeper. When you're a freelancer, you have to do all of that on your own, and you also need to do what the financial director does, and that's forecast cash. So what's coming, what's going, being on top of which client pays where, so you can optimize it, so you don't have to take a loan or use your credit cards, but actually chase your clients to pay you earlier, work on your payment terms, and try and deal more with cash. Cash was cheap, now cash is expensive, and as they say in business, cash is king. So look at your cash, look at your cash flow. And if you do that well, you can then accurately forecast when you're going to be where, and therefore use your credit cards less. And finally, the accountancy. The accountancy is where most people think the savings are, and it's true. But as Ricky is going to explain, without the first two, Ricky won't be able to help you. So in order to do good accountancy, you need to have super detailed management accounts, right? And that goes back to the good bookkeeping. Without good bookkeeping, you will not be able to make significant savings in the accountancy. Still things that can be done for you, for example, like getting all kinds of government loans and all kinds of schemes to help businesses, but you won't be able to capture and claim all your allowable costs without the bookkeeping. I gave 3 ideas of where we need to focus in our financial management, but the problem is that it's a lot of tasks I've just thrown at you. And as I said, usually in a large company, there's a full team of at least 3 or 4 people who do that, and as a freelancer, you have to do it on your own. So maybe it was a bit impractical what I was saying, but I think it is, and I think it's worth investing it, because without going into numbers, because I promised to cut down the 25 minutes. There is between 2,000 and 5,000 pounds an average freelancer can make in savings a year. And that will be on credit cards, it will be on overdrafts, it will be on loans, it will be on taxation, on services you don't need, and on government benefits. So I think that that's a significant amount of money, and I think that can help. If you can cut that, you will be leaner and meaner, as they say in business, and those kind of businesses will survive recession. How do we do that? Well, thankfully, technology kicks in over here, and there is a slew of new solutions in the market that were designed for freelancers in the accountancy world. Many people are using Free Agent these days. Free Agent has all kinds of features to help you remind or chase your clients, to help you categorize your expenses, connect to your bank. There's Amber, which I recommend. It's a newcomer to the market, seems to be a little bit more forward-thinking than Free Agent. And then there is another family of solutions that we don't talk about so much in the business context. Those are budgeting apps. Budgeting apps are really made for families to try and capture the family expenses. But as I said, when you are a freelancer, your personal expenses and your business expenses are a little bit intertwined. And I think that the two solutions can really complement, because the budgeting apps are much better in automatically doing the bookkeeping. They can capture all of your expenses, and that's what they were meant to do, where accountancy software do that and other things, and therefore don't do the bookkeeping so well. So I recommend playing with Mint is very popular, and yeah, and BriseUp, I don't know if it works in the UK actually. Business automation like Honeybook can help you reduce your burden of running your business. That can do your project planning, which client comes in, where, send out quotes for clients, and therefore give you more time to do the clever management that I was speaking about. And finally, there are banks these days that are really focused on freelancers and can offer all kinds of benefits. And I think it's worthwhile looking into it. So using technology, you can achieve wiser management of your finance, hopefully save 5K a year without giving up on your pub expenses or whatever you like doing. That's me. That was me streaming through it as quickly as I could for the benefit of timekeeping. And I hope we have Ricky back online.
We do. Hi, Ricky. Lovely to see you. Thank you. And I'm going to come, obviously, please, anybody, if you've got any questions, we'll answer them at the end, but we'll move on to Ricky's invaluable tax advice before we start that. Thank you.
Thank you, Joe. Thank you, Benjamin, for that excellent introduction. That's what we're going to speak about. If we move on to the next slide, Benjamin's controlling the slide, so it's going to be a little
great.
Right. So what we're going to cover today is the need for good business records, some basic tax rules that will help us understand how to prepare your tax returns, the cost of living crisis and where are your costs, and also minimizing tax cash flow pressure, whether we can make anything or make small changes to free up some cash flow. So if we move on to the next slide. The most important thing, and as an accountant and as a tax advisor, we see every single day of the year, usually more in December, January, but most days of the year, is a need to capture expenses. Capture is a slogan, but it really is so important. If you think about the tax cycle in the UK, you start from April to April, and then you have to file by the following January, 31st of January, the following year. So if you think about the time from April to the following January, if you've made expenses in month one of your year, you're talking about 19 months ago. And when you're looking at preparing your tax return and looking about preparing your financial records, if you're preparing it in January, a year and a half later, there's no way you're going to remember what that expense was for and why you made it. So it's really good to get into the idea of capturing. The other thing we see so commonly now is if you don't capture live in month one or month two or keep a running catalog, the way that business bank statements are on 99% online now, which is great for the environment, but it means that most people don't check their bank statements ever, or for like a year period. And it's really, really important that you're checking through your, even if it takes only 30 seconds, a minute, 2 minutes, check through your bank statements, because number one, there'll be subscriptions there that you no longer use that you won't find out about for another year if you don't, capture them. If you see it there and it's coming out of your account every month and you're monitoring that, you'll stop those subscriptions which aren't necessary. But if the situation is that you only see it a year and a half later, then you've incurred huge costs, unnecessary costs potentially, and also other things. So if you see parking expenses, you're never going to remember what that parking expense is in a year and a half time. But if you know it's business related live, you can write a short note, take it out, put it on a spreadsheet, or put it on one of the amazing softwares that Benjamin has spoken about, and that's it. You've captured it, and that all those expenses will all be deductible against your profits, your business profits. Also, good records are the best defense. So very often we see people with HMRC inquiries. They could be for specific reasons, or just because HMRC will check a few tax returns every year, even for no good reason at all. And what we often see are those with good records can answer the questions very, very easily and end very quickly. Those who can't remember what that expense was for often are left in a sticky situation. So actually, ignoring about tax saving, but just about having good records are really, really good for if you ever get a HMRC inquiry. And also, as I said before, contemporaneous record keepers pay the least tax. There are major tax savings just because you capture more, and that's going back to capture, but you just capture more costs, and every cost you capture, you can save, depending on your marginal tax rate, 20–40% of your tax liability. Right, we're just going to speak very quickly about the tax basics. So what is an allowable cost? So wholly and exclusively for the purpose of trade is what the legislation says. That's a nice slogan, but what does that actually mean? So if you look at a normal cost, it's usually obvious. So if you've got a cost, if you are a office, if you've got an office and you rent out office space, then that's purely for the purpose of the trade. If you're working from home, it gets a bit more complicated, and we're going to discuss that a bit later. Don't forget capital allowances. People very often forget capital allowances. So if you make major capital expenditure, in the most part, if it's purely for business, you get 100% relief in year one. So if you're a freelance photographer and you buy an expensive camera, that can be a full deduction in year one. So that could, that might make the difference when you're making that decision to, invest in your capital and assets. That might make the difference for you if you can get full tax relief in year one. Office equipment, very often people don't put office equipment through, but your printers, etc. Even if you're working from home, your office printers, your cartridges, and your phone lines, etc. Those can be put through. Staff costs are usually obvious, and people usually capture staff costs. But it could be that your spouse might work for you, and they've got, they don't have much income. Maybe you could pay your spouse a salary. So that might be worthwhile thinking about the staff costs. Travel costs, we mentioned parking earlier, but travel costs are very often missed if they're not captured contemporaneously. So where you've got your parking expenses, your mileage, it's very, very easy to do it, within the month, or even better within the week. But if you leave it for 9–12 months, unless you've got a really detailed diary, it's going to be very, very hard to piece together back. Premises, again, if you're renting an office, and that's fine. But what about if you're working from home? And that goes back to the bottom point, apportioning costs which are fair and reasonable. So if you're working from home, HMRC say that apportionment of costs, because you've got duality, you've got the fact that you live in your house or your flat, but also you've got one room dedicated as an office, or you might use your front room to see clients. There's lots of different setups and lots of different possibilities. So everything, HMRC guidance on this says it has to be apportioned on a fair and reasonable basis. So if you think about a 2-bedroom flat, it's got 3 main rooms, the dining room or living room, and then the 2 bedrooms, and then all the other rooms are usually ancillary to those rooms. So if you think about it, if you've got 1 bedroom dedicated solely for your office, then maybe it's very reasonable to use a third of your running costs. And again, you might have to portion it because you're only really using electricity, etc., water, just between 9 and 5 or 9. But again, it has to be on a fair and reasonable basis. But if you go through your costs properly, then it's very easy to generate more than what most people are putting through. And advertising and marketing costs so many times, people's LinkedIn premium licenses, they're just not put through the deduction. Why not? I mean, that's what you're using LinkedIn for. Most people aren't using LinkedIn for social media. They're using it to advertise their business and promote it. So those things, if you're a member of a trade body, if you're a member of different bodies, then again, put you through your sponsorship costs, your annual costs. If we move on to the next slide. So when we're going through a cost of living crisis, what we often see in accountancy with a lot of clients is that people just do a copy and paste job. They take the new income, they take last year's expenses, they put it through, they don't spend too much time on the tax return, and that's what they do. But we're in a cost of living crisis. All costs across the board are higher. That means your costs from last year must be higher than this year in 95% of cases. So this year is not the year to do, never the time to do a copy and paste job on the tax return, but this year certainly is not going to be the year to do it for yourselves. The cost of living crisis means costs are higher, and that means you're going to have more expenses to put across on your tax return. Again, what's fair and reasonable during a crisis? Well, as we spoke about before, fair and reasonable is the truth. And if costs are higher, then you're going to have higher costs. So I don't think that that's going to be an issue. And also the other final point that we're going to make in the slide is, during a recession, if people are unfortunately in the loss-making position, they often don't bother with the tax return, or they think, well, I'm not made any money this year. But your cost of running your business generally remain the same. So you can have large losses building up that if you don't capture them properly, or don't care about them, that could come off against future tax liabilities. Very often, and we saw this massively between 2008 and 2010, large corporates and medium-sized corporates were having massive losses in 2008 to 2010 during the last recession. And what that meant was that they built up large losses, and for the next 2-3 years, they weren't paying any tax because they've got carried forward losses. The same applies to a freelancer, and there's definitely the ability to capture losses and to bring them forward into future years. So don't think that just because your income's down and your costs are high, that let's not bother prepare a tax return properly because there's no tax to pay anyway, who cares? That's, misses the point. Now is the year to build up on your losses if you're in that situation, so that next year, when you're recovering, your income recovers and the costs maybe come down a bit, inflation reduces, then you'll have the ability to reduce or pay no tax at all. And the other thing that we have to be aware of is the way that freelancers usually pay their tax on an installment basis. So a self-employed person would, in the first year, they'd pay the full amount of tax for year one by January 31st after the year end. And then they'd pay what's called a payment on account, which is basically the tax liability, in most cases divided by 2, and they'll pay 2 installments, one on the 31st of January of that year, and then the second on the 31st of July of the following of that same year, after the 31st of January. And that's the way it'll work going forward then, is every year you'll pay 2 installments, one on the 31st of January and one on the 31st of July, and then you'll pay a balancing payment if your liabilities are a bit higher. The issue with, and what we see a lot of, is that the installments are based on your historical liability. So last year you might have had a really good year. This year you might not be having a great year, you might be making no profit at all. But when you're paying your first installment, you're already 9 months into your year. So you should know roughly in January what you've done over the last 9 months. That is the point in time you can assess, saying, are my payment installment calculations going to be correct for this year? And if they're not correct for this year, then you can reduce them. HMRC allow this, that profits are down. There's different reasons you can reduce your payments on account, but this is something that HMRC allow. That will free up massive cash flow, because what will otherwise happen is you'll pay the same payments on account, you'll be due a refund, you'll file your tax return on 31st of January, you'll be due a refund, but HMRC take forever to pay refunds back, and you've lost out on 2 big installment payments for 6 or 9 months. That might be the difference in terms of managing your cash flow for you. So very, very important this year, especially when profits are likely to be down, that you reconsider your payments on account to make sure they're still applicable going forward. And any questions?
Wow, that was amazing. That was a really, really fantastic overview. Thank you so much, Ricky and Benjamin. Benjamin, I've got a question for you, or for both of you, really. You gave some examples of improved financial management, reducing the tax burden, identifying easy savings. What order would you put those in for people to, if you say, right, go away after at 1:15 today, what would you say your top tip would be? Benjamin, let's start with you, and then I'll move on to you, Ricky.
I would say without data, you know nothing. You're flying blind. And I can give a real example on a client that I'm now accompanying, I'm advising in the AI business. The recession came, they're based in the US where the recession hits a bit earlier. Cash became expensive. They needed to start making saving. They didn't even know where to start because they didn't have good management accounts. They didn't know what they're spending the money on. It took them several very precious months to start figuring out what they're paying on and how they can save money. So if you're going to do one thing when you go out, is set up a system to capture your expenses. Right? Don't do it sporadically, catch one here and there. Set up a process, a box where you put all your expenses, a day in the week you're doing it, some kind of a process for yourself that you can capture.
Yeah, that's a really, really good tip. So I often find that because people are doing, they've got a lot of hats to wear, and it's very easy to for one of the hats to just kind of fade away. So that's a really good tip. Thank you. Ricky, anything you would add?
No, I think setting up a system it sounds like a technical, difficult word, and people sometimes shy away from the concept. But let's break it down into like really simple concepts. If you've got an online bank account or you've got an online app for your expenses, just put a diary, a meeting in your diary or your own personal diary. 30 minutes on a Friday, maybe Friday's your busiest day, so 30 minutes on a Tuesday or Wednesday, where you've got some quiet time just to go through the last 7 days expenses on your app. Break it down into small chunks. What we often see, and we're all guilty of this, it's not, there's no exact science, but what we often see is that the job becomes too big to do and then it gets dropped. So you basically get to a point where you do it well for the first month, and the second month you drop it, and the third month you've got 2 months to review, and then you say, well, I don't have time anymore for that, and then suddenly you're at the end of the year and you it's very, very sporadic. So it's really important to set up a system, and a system that you don't breach, and try and get that a system, not being a system like a complicated system, but just a process in there which is something that you commit yourself to do every single week or every 2 weeks, whatever's most appropriate for your business.
And I guess also chasing your invoices. It's very easy to forget an invoice that's going out. So also chasing your invoices. Really good.
Yeah.
Thank you.
That's a good point.
We've also had a question from Andy saying published inflation rates are based on historical data, usually the last 12 months. Future rates may be different. I agree cut and paste is a bad idea, but do you recommend estimating future costs on the basis of forecasts, not current figures?
Well, I think it's a very interesting question. I think there's two ways to look at that question. I think one is probably Benjamin's approach, and one's going to be my approach. When I'm looking at it from a tax point of view, you can't use estimated costs for tax purposes. So we're looking at real costs, real data, real life. If you're looking from a budgeting, I'm sure Benjamin will expand on this, but if you're looking for budgeting, certainly trying to predict future inflation rates, etc., will be valid.
Yeah, I spoke to many financial experts in the last 6 months. They project about 3.5% going in the next couple of years. I wouldn't be surprised if it goes above. We have some inherent shortage in commodities and such, and therefore I'm a little bit more pessimistic than most of the experts. So yes, I would slap on 5%, at least 5% above what you were spending until now. And if it ends up being 3.5, then when you're 1.5% on, that's good. But if it ends up being more, then you're out of cash, and that's not good. So I would be on the prudent side here and definitely just slap on 5-7% on top of everything.
And Wayne asks, if one is self-employed, is it better to always have a limited company, or can one claim expenses being self-employed?
So, I mean, it's quite a detailed question, but trying to break it down into one. So if you're self-employed, it depends on your nature. A limited company works well in some situations. It works well where you're not spending all your money, so you can keep your money in a company wrapper. But again, it doesn't apply to all situations. You've got to be worried about if you're operating through a limited company, things like R35, whether you should be an employee. But if you're a standard freelancer and you've got the choice, it really is very, very specific to your circumstances. If you're spending all the money each year, and so basically everything you earn you're taking out so you need to live on, then there's very little benefit, if any, of operating through a limited company, because unless you're in a risky area and you're looking for commercial benefits such as trading risk, then operating through a limited company will probably be more costly because you've got accountancy fees which are always going to be higher for limited companies, etc. But if you can store money, storing money at 25% rather than taking it out at a higher marginal rate is certainly worth pursuing in a limited company if that works for you.
Thank you. And then we've got a question, and so I've been private message with this saying, I want to ask about pros and cons of setting up a limited company for investing in buy-to-let property. But if that's not relevant, then she said she'd be very happy to reach out and ask off the call.
Yeah, I mean, again, buy-to-let property, you've got, depending on the circumstances, depending you've got other property, it obviously comes with a 3% surcharge for SDLT purposes. But if you've got a main home, that would apply in your own name as well. You've got mortgage reliefs in limited companies at the moment that don't apply to individual names. But again, we'd always advise everyone who's setting up property in a company, never put a property in a company you're going to live in, because there's lots of tax disadvantages to that as well. So more than happy to reach out if appropriate. But those are the things you think about. But certainly there are lots of people with buy-to-let portfolios in limited companies for very good tax reasons.
Benjamin, I wanted to ask, when you were running your businesses, what did you do, or the one that was right in the middle of the recession? What did you actually do, kind of to cope with the recession that we had back in 2008? What was your key? How did you cope with it mainly?
Well, first, I was green at the time, so I just came into the business, and mostly I was panicking, and I have to give all the credit to my business partner that calmed me down. What we've done was to diversify our business and find where we have a specific capability, what is complicated, what is difficult for the large players, those who move slowly because they are large, and quickly identify where the clients are not going to cut budgets, where they really need our services, and diversify there, including, by the way, a very bold decision. Again, all the credit goes to my partner, to invest money in diversification during a recession that was scary. That's where I almost lost my hand, but she kept it, and that saved the business and did us great. Second was to really develop very enhanced financial controls, so I can predict cash flow very, very accurately and reduce cost this way. And being very prudent with the money, like every penny counts, as they say. So those are the two moves we've done, and became lean, survived it, and came out stronger. That's the good thing, John. If you survive a recession, usually there's more space afterwards, and those who survive it usually do well.
Thank you. Ricky, anything to add on that? I mean, I guess it's a bit different for an accountant in terms of maybe recession's good.
I think we saw, I think what we saw as accountants is that those who diversified and didn't just carry on in the same way, but actually looked at different opportunities in different areas, were probably the ones who came out best from the recession.
Which also happened in COVID. The people that it wasn't. It was June of last year where we were kind of still really dealing with COVID. It really was those businesses that pivoted. I had chefs that did online deliveries. I had a DJ who went into social media marketing, you know, like they completely pivoted or did something completely different, and they're now still thriving. So
no, definitely.
John, if I can just say a word on that, just one word, one sentence. Being small is an advantage, right? So on one hand, the big players have economy of scale and can push prices down, but don't compete on price, because it's you can never win against the big guys. Being small, play to your advantage. You can be nimble. You can find opportunities that the big boys will not see. Take advantage of that. Play to your strengths.
Yeah, that's a great, really good tip. Thank you. Andy has asked, which is quite a big question, Andy, can you summarize any important points from Jeremy Hunt's recent budget, either the good or the bad?
It's quite a big question. I mean, the main points are that everything that was in the previous very short-lived budget was reversed to the most degree. The most painful parts for those middle earners, effectively, or those on 125,000, will now be paying at the 40%, 45% from 125,000. And the impact of that is actually quite big. I mean, although 125,000 is a large salary for most people, their costs will be budgeted to £125,000, and we've seen a lot of people suffer and struggle in that area because they've got a higher cost. So that was a big blow to those people in that kind of tax bracket. And the main other things, basically, it was a very defensive budget, which I'm not here to give political discourse, but it was a very defensive budget in terms of trying to shore up the economy from a financial perspective and give the market some reassurance with regards to the future financial stability of the UK. Now, there are reasons why they do that. They do that to make sure that government borrowing levels, or the cost of government borrowing, is maintained. And the problem we had with the last budget was they tried to do everything too quickly, spook the market, and then the cost of the UK borrowing soared to ridiculous levels. And because we've got such a high debt mountain, it was just too costly to keep, and that was why we got into this vicious cycle of the run on the pound. So there's lots of financial reasons why these things are. Whether it's the right decision, I'm not going to go into, because that's more of a political debate. But it certainly is likely to be the type of thing that we'll see. I wouldn't be surprised if in the next budget, if it lasts that long, you see a lot more rabbits come out of hatches just before the election, because I think the point of this one was to do it as more of a defensive stability restabilizing budget, and then the next one is going to be where all the giveaways come. Whether it's too late for that or not, that's a matter. But I think a lot of the tax increases will be reversed, reduced, or stabilized if they can afford to do it in the next budget.
Thank you. I hope that answers the question, Andy. You mentioned, which I think is really important, the keeping good records and using digital financial software, and you did recommend Free Agent or Ember, which I actually haven't heard of, so that's interesting, and Xero. If somebody doesn't want to do that, is Excel sufficient?
Yes, I used Excel for a long time, to the dismay of my accountants, Ricky. But I've managed to do very well with Excel. If you're a spreadsheet warrior, as they say, yeah, Excel is good. Work with it. You can get far. You will then have to translate it for your accountant, because they usually like on accountancy software. And today, with making tax digital, it's almost mandatory to do that. And also should tell everybody that as of next year, there would be, I think, 4 times a year that you have to submit accounts, not once. So in that sense, making the transition will be helpful. But Excel, I've done Excel for many years. It works.
Yeah, I'll just add to that, the important, Excel's very, very good for those who use it, know how to use it. As Benjamin said, with regards to the VAT thresholds, if you're over 85,000, you're most likely going to have to use accounting software anyway for making VAT submissions. So that's very important, given the change of the rules. And going forward into next year, although we haven't got actual details of how it's going to work, making tax digital is going to hit income tax as well. So there are possibilities that you'll need to have some sort of financial package to be able to file your tax returns, etc. So those are things that we just have to bear in mind. But otherwise, Excel certainly as a first port of call for budgeting, very, very easy to use, very, very quick to set up, even in very, very basic format for someone who doesn't know how to do that well, to set up lists, spreadsheets, months, years. It's very, very simple, easy to use, and it's not as frightening as accounting software. So someone who's not going to do something because it's just too hard to do, Excel's probably the best solution.
And please, anybody, we are, myself, Kim or Sarah, very happy to help with the cash flow forecast, and you can also use that as an actual kind of monthly expenses, and also just in terms of kind of on topic, as I mentioned in the opening, I'm going to be running on Tuesday a negotiation and pricing workshop. So if you want to try and negotiate costs, obviously there's some you can't, some you can, then please sign up to that workshop, which is in person next Tuesday here at the hub. So thank you. I would just like to say a huge thank you to both of you, Ricky and Benjamin. And I know, Ricky, you stepped in for Arieh last minute, so I appreciate really, you did a wonderful job, really insightful. Thank you very, very much, both of you. It was really useful. Lots of takeaways from that I will be certainly talking to people about in my one-to-one meetings, and we've got the recording. People can watch back, and we will make sure that people watch this session back, because it was really very, very useful. So thank you very, very much.